morning, good afternoon, good evening. How you, Shooter, Ren, Kevin, Brock, everyone doing okay? So yesterday I was talking about that there might be a stop hunt over this high. Good morning, Alexander. And it turned out to be a breakout. So actually, some type of triangle. We're up near objectives in silver. RSI is not making new highs. Same with gold, but at 80. And besides explosions in Beirut supporting the move in the metals, you have dollar. So at the beginning of the week, I said I thought there'd be a chance for a new low in the dollar, maybe around 92, and a higher low in US dollar yen. So far, that's happening. So we could make a new low in the dollar without making a new low in US dollar yen. And I just want to point something out on yields is that we got very close to Goodburn's target of 44. We got down to 51. So maybe there's one more decline here. This looks like a two, but we're getting so close in yields. Here's your TLT ETF on TLT. And you could see grinding, grinding, grinding. One of the few things to not make new highs after the smash in March. And you would think with the Fed support that we'd be at new highs yet. New highs we're not. Just want to point something out for the metalheads. Okay. Yeah, crude. Yeah. Talked about the potential for another new high in crude. And here we are. I think Steve said we could go to 44. Just want to show you Newmont. So after all of this strength in the gold, it took all of this just to get a new high. If you're long Newmont yesterday and you saw what gold did, you'd probably be kind of disappointed. We're just making a new high here. Okay, Ben Maldonado, who's a contributor on Face, I've interviewed him many times, has notified me on Twitter. I told him to come in today. Today's a big cycle day in his work, looking for reversals or acceleration. Well, yeah, well, that's kind of like either or. So it's hard for me to look for a reversal in a market or an acceleration at the same time. So I think we've had some acceleration here, don't you? So if is gold going to accelerate to 2500? Okay, and Brock, you're talking about the on the S&Ps, you're talking about there's a gap fill going back to here in the S&Ps that if you just had you probably had it as a gap higher open. Okay, is that what you're talking about? Where's it filled, Brock? We're at 33.2590. Okay, so we're almost there. 33.27. You know what? You have pretty good eye with all of this going on, multiple time frames. Yeah, it was in the spider. Okay. So here's the spider. I think I have it up here so everyone could see what you're talking about. See, because the spider opens and closes. So here's the gap that Brock's talking about, and that would be 33, 332.50. So that's where it would be filled at the low here, 332.58. So it still has a little work on the upside to fill it. Whose education program? And congratulations, Ingmar. You mean IWM? Russell? Amira? I love to interact with you guys. Okay. Okay. So you're talking about, okay. What education program are you talking about? Congratulations to all you longs and the medals. Oh, okay. So yeah, you can learn a lot in here in face. You can learn more even here and being in our chat room with everybody and having all the research here at your fingertips. So let me ask you, Sinatra, you've learned a lot in here. Are you a subscriber? Thank you, Hanya. So I know you believe in, so you don't have to, this is not about day trading. You want to give back? Call Joe Perry today and he'll cut you a deal. So that's how you give back. And we're not day traders. I mean, look at these active patterns in play. They're not, they've been holding these positions. Okay, that's how you do it. You want to give back, you become part of our family and take some type of subscription. And and it's not charity. It'll be good for you. It won't hurt you. Okay. So Blake's up on Mexican. So you could see when positions are put on. Okay. And they're not day trades, any of these ideas. You're welcome. And glad that you're having a nice run. Don't get sloppy. I know sometimes I have. When you have windfall profits, you get a little hubris, and then you take a couple losses and you try and rationalize it, and you say, "Well, it was the house money." Once it's in your account, it's not the house money; it's your money. Protect it like you went out digging ditches to earn it. Because even though this isn't physical labor, the mental labor is pretty intense. So protect your profits. Okay. Go to the door. 8% in a week, take it and go to the beach. He took it. Okay. Just getting back to a couple of markets before I turn it over to, okay. So I think this is, a lot of people thought that Dixie had bottomed, and it's not looking like that to me. So here's your daily. So we get a washout. I've been looking for this red line, kind of like what the yen did last week. So this red line now is coming in ballpark 91.60, and this one's at 90.69. So here's your weekly. Unless we get a big reversal midweek here, dollar still looks pretty crummy, guys. But down here around the at new lows, say around 92, because we had a pretty good pop. I don't think that we're going to confirm a new low on the 4 hour in the Dixie. Maybe not a two. The one probably will. Okay. So I think I've covered everything I wanted to talk about. Take a quick look at Euro Pound. Not ready to do anything there. And what? Oh, Canada really took it on the chin here. I think they blew out a lot of divergences at this 32 level. It's a little bit, but this was also crude breaking the new highs. So I would start monitoring this for it to start diverging over 30, but it looks like it has some work to do. Why would Canada bottom? Canada making new lows for the move, so he finally gave up the ghost, while the Dixie hasn't yet. The Dixie is still about 39 ticks away. So there's Canada breaking some pretty important support that it kept holding, and now it's giving it away. Crude, let's see, as crude, on the daily we're diverging. We're over 70 here. So we'll see if some of Ben's cycles end up working. There's too much mo for me to short it. I'm not doing anything right now. I took my medicine yesterday on a few things. NASDAQ kept trying to, make this real, kept failing at this double top that we had the stop hunt on, and then late in the session it broke through. But even NASDAQ at new highs is not confirming. But I'll tell you lately, a lot of my divergences work, has not been working. And we keep grinding. Okay. All right. So that's because a lot of signals I took were over 70. I had FOMO this week. So we'll see. This is still pretty negative looking. I still think there's a top brewing here. NASDAQ, I guess if we get a close back underneath it, I'll go with it. That's 1068.50 lower. But we're close. I know Ben has a cycle due. Yeah. I know Ben has cycles due, but there's some other guys. I think next week, Ben Norwinski has some cycles due based on the planets next Friday. And then Mark Newton was talking about mid-August for some cyclic work, maybe have another one there too as well. So I'm going to I'm going to invite Blake to come in here and give you some guidance with the bias chart. And almost everything he says is written down on the bias chart. Bullish, range, bearish, is still going. So good morning to you, buddy.
Hey, good morning, Dale. How are you?
Good, bro. How are you?
Hey, we have jobs data here in just a minute, like in about 2 minutes. I wanted to start the analysis with the bias chart, but I don't think I'm going to have a chance to do so. All right. Well, it's all right. We're going to go through all the charts here in a few minutes, but look, we got to pay attention to the data that's coming out. But yeah, I'm all right. I am going to be leaving today, which I was joking with the guys and gals in the chat room. We're actually going on the lake for a couple hours today, so that's exciting. Our neighbors invited us, and there's some of our neighbors that have been basically our quarantine neighbors, if you will. And we're gonna have drinks with somebody. We have a drink with our neighbors, next door.
Part of your circle.
Yeah, it's our circle. And so they rented a boat, and they're like, "Hey, you guys want to come on a boat?" We're like, "Yeah, sure." Because a boat is always great when somebody else owns them. I choose not to own them. I grew up with my family owning boats, so I don't.
Well, they say, Blake, about boats, the two best days are the day you buy it and then the day you sell it.
The day you sell it.
Yes, correct. Hey, hold on. And yes, and good morning, Steve.
Good morning.
That very much is. You know what BOAT stands for, the acronym?
No.
Break out another 1,000.
And that's old. That's old. Now it's probably 10K.
Yeah, exactly. But anyway, so we're gonna go out on
like that.
No, and they anyway, the reason why I'm bringing this up, and let's keep an eye on this data. By the way, how long do we got? About 20 seconds.
20 seconds.
The reason why I'm bringing this up is because people that have listened to me for years know that when I leave my computer, which I will not have access to the markets will move aggressively. It's really kind of crazy how it happens. So you guys might be in for a bit of volatility today.
1.6,
1.7 million.
No,
Was that what it
100,
is?
167, so way below.
Oh, wow. Wow.
Yeah.
Wow.
If it's not a typo.
That's not a typo. Wow. Holy cow. So the markets just got smoked. The dollar is getting hit. But the dollar perversely may actually start to strengthen after that, believe it or not. The euro just hit new highs, hit the 78% retracement. It's coming back down again. Yeah, we may see the dollar strengthen a little bit. That's not a good number, is it?
Well, it is, in essence, the third week which shows that employment advancements have really stalled, and now we can probably start talking about reversal.
Yeah, I mean that's let's just pull up the data here. I'm going to pull up the chart. I actually tweeted this a little bit earlier, and wow, we did come in 167. So that's 167,000 jobs were created. That's well below expectations. Well below expectations.
What were they looking for? What were expectations again?
1.5 million.
1.5 million. Yes.
Oh my gosh, 10% of what they were looking for.
Yeah. So obviously stocks are coming under pressure. The dollar is, it's wobbling around it. The dollar's been under such pressure the last 24 hours. This is just kind of expanding on that, but like I said, the dollar might actually start to strengthen a little bit as if the market goes a little risk off. I mean, if you look at what's happening with the S&Ps, the S&Ps are coming down a little bit. And by the way, we might as well talk about the S&P since we're on it. Remember, the 127% extension is here at 3316. Now, we've actually rallied above that, and resistance right now looks to be today's high at 3329. So I'm just going to write 3330.
You got a little throw over on that wedge, buddy.
Good. Dale, you're pretty famous for the throw overs. So
that's only because when I'm short and it does that, I throw up. But
you throw over like kind of overboard over. Anyway, joking.
Throw me overboard.
So support right now is going to be 32.50 on any significant dip. So I guess we should write that down.
But Blake, can I ask you a question? We're being a couple of our friends are asking: is there a revision? Can you see a revision on the previous number? Because I don't see one. Maybe on Bloomberg.
Yeah, let me see here.
Because there's nothing on.
Not yet.
Not yet. Okay, fine. Just hold on. It's been revised. The actual number 4.314. Can you see that?
Wait, where?
That's what I'm seeing. Maybe that's wrong. It's on the investing.com calendar. Maybe that's wrong.
I don't think that's correct because the prior number is right here. So
others are reporting that as well. I don't know where they're getting it from.
Previous revised 4314. I see it as well, still on LiveSquawk.
The previous one. Okay, so that's revised a lot higher. Okay.
So the previous one is revised higher.
Yes.
Which, if that's the case, makes today's miss even a bigger one.
Well, no, because you have more. Have more on the last sprint and less on this sprint. Net, you're flat.
Yeah, but that means that between the two of them, there was a lot worse development.
Things have slowed.
Oh yeah. In terms of movement, from one to the next. Yeah. Okay.
Yeah.
Okay. Well,
kind of lines up with COVID exploding in the U.S. that slowed it down a little bit, right, Steve?
Yeah, I mean that's what it looks like.
Yeah, it's just a report.
Yeah, so it looks like it is just a report. I'm not around, but people are obviously starting to watch data now, so that's important. Hey, you know what I got to do, guys? I've got like 10 minutes to try to jam out this data or this analysis. So let's talk about the euro. The euro's at the 78% retracement. Today's high. This is the 78% retracement. We could obviously make it all the way back up to 119 and just test the underside of this broken channel, which would be 119. What is that? 119.10, 11. So 119.11. It's bullish, but just realize that we're stalling at the 78% retracement right there in the 60s. Okay. The cable, oh, sorry, I got to get support. Support right now, intraday, I would say our dips right back down to 117.80 should be support. Okay, if we should get a dip like that, you know, it's hard to say. You know, with the market starting to show some weakness, we might get some dollar strength coming through. That's why, you know, I think you gotta kind of prepare for that, especially after yesterday's, you know, big move in the dollar. You know, if the dollar snaps back, you know, we could see a little bit of a rally back. Let's take a look at the cable. So the cable is coming right back to the. Oh, you know what? Regarding the euro, let's also talk about this. Remember, 118.30 is the big 618 retracement on a weekly basis. Don't forget that. And you know, we can overshoot that big weekly fib level by 50 to 100 pips. It's really not that big of a deal. And we have already proven that we're getting a lot of two-way action around it. So just keep that in mind. Cable. 131, obviously 131.70 is resistance. If you guys are using Forex Analytics, I closed the pattern in play yesterday below 130 because it was the 38% retracement. You know, obviously that was the wise decision. Wasn't so sure about it at the time, but it was, and that obviously is going to be really key support moving forward. So that comes in at 129. That support right now is 129.70. Bullish wall above it. Okay. Let's go over to the Aussie. The Aussie we're almost at highs again. Let's imagine we break highs. If we break highs, we could go to 72.72, but resistance right now is 72.30. Very strong. And doesn't surprise me. I mean, we have commodity currencies everywhere that are, you know, breaking out. I mean, it's not just the Aussie. I mean, look at the Canadian, look at the Norwegian krona. I mean, you know, these are commodity currencies that are showing, you know, some strength here. So, yeah, just keep that in mind. Let's see here. The Aussie support right now would be any dip back down to 71.50. Okay. Whoops. Sorry. That is bullish. Got it. Okay. Kiwi. The Kiwi is struggling a little bit here, and we're struggling around the 618 retracement. So this is still kind of goes in the same vein of what we were talking about yesterday, where the Kiwi is just kind of not following suit with the other currencies. And you got to keep that in mind when you're trading the Kiwi, because you know, we did hold the 65.80 level, which I'm going to write down today is still really key support, 65.80. Okay. We're still bullish, but you know, you got to be a little, like I said, you got to be a little careful with the Kiwi here. The highs, right? Let's go up to the 78% retracement, which comes in at 66.85. Is resistance. Dollar Canadian. Dollar Canadian is at the 161% extension of this move. The dollar Canadian, I actually Traded it yesterday. Did not trade it well. I got long, and I got out, took a pretty big hickey with it, and I'm just like, wow, I did not expect it to go full on implosion here on the Kiwi or on the Canadian. They call it a loonie for a reason. So that was we just hit the 161% extension, but the fact of the matter is we're breaking down. So any rally back to 133.10. Okay. Is bearish, and we might extend that move to 132, which is the 127% extension of the bigger range, right here. Takes us all the way down to here. Hold on one second, please. Man, I am watching this euro. We're nearing the 88% retracement here. Strong. The dollar is weak. Thought the dollar might actually be able to catch a bid, but I don't know. It doesn't look like it right now. So let's go back over to, we were just talking about the Canadian. Let's go over to the peso. The peso is still holding up pretty well, given that the dollar is so weak. But the US dollar Mexican peso could come all the way back down. Hold on really quick. One second, guys. Sorry. The US dollar Mexican peso could come all the way back down towards 22.44, which would be the 127% extension of this move. Now remember, this is the 38% retracement, and actually I think we could write down 22.38 as being the 50% retracement. 22.38. Oops. I'm going to keep the dollar Mexican peso in. I think it's bullish, but because the dollar is so weak, I'm going to put it in range. That we're still bouncing around the range. We could make it all the way back down to the 20s, obviously. Especially with the dollar weakness that we're seeing. But it just, I think it's turning bullish, but we can't deny the dollar weakness that we're seeing here. So let's just keep that, just be aware of that. Resistance right now is going to be 2260 intraday. Let's go over to the dollar Swiss. Dollar Swiss is coming back down to these lows. This is the previous channel, just like the euro had the channel. So that means the 90.50 is going to be support. Bearish. Resistance. You can see these little spikes right through here. So any move back up to 91.40 should offer resistance. Let's go over to the dollar yen. Dollar yen really, I'm like I've told you guys, I'm not very excited about the dollar yen right now. Resistance, I think, well, it was 107 at the 50% retracement. That trend line is still coming down, so it's 106.75. Okay, and actually, I'm going to keep it on range. Support. Intraday support, probably, I would assume that we come into some support around 105. So just let's go over here. 105.06 is the the 618 retracement. So I'm just going to write down 105. That should offer pretty decent support today. Okay. Dollar index. This is what I was looking at with the dollar index, but we have extended this move towards the 88%, which would be, that'd be a 200% move. I was thinking that that might get a Gartley, but yeah. The 88% retracement comes in. Right where we're at. Hold on really quick, guys. I got to look at something. Oh, shit. Sorry, I was just looking at something. How did that happen? I'm sorry, I was just looking at something. How did I get two of those? That's weird. Okay. Anyway, sorry, I had to look at something that wasn't jiving on my screen over here. Support is 92.50. We are in a bearish trend. And resistance now should be any move back to 93.25, because that's all the support right here. US dollar, Norwegian krona. Now this currency pair, I was really hoping we'd turn above this trend line, but we didn't. And I think a lot of that has to do with this, massive move in crude, also the dollar, but the crude oil is back above the 200-day moving average. So support might come in at 894. Resistance now is going to be back at 902. So 894. And resistance is 902. And then gold, I guess we should just talk about gold, because gold is just bullish. So as I told the guys and gals in the chat room, just, it's a train. You get on the train or you just get out of the way, because the train is moving. And in this case, yes, we could get, a pullback. I think that that 2000 should offer support first and foremost. And it's really tough to find resistance after we've rallied so far. And like past the 161% extension there, the 261% extension, this move comes in with another 261% extension of this previous triangle breakout. So I mean, I think right now we just have to mark up 2050 and then 2000 and just realize that it's in a very bullish trend. So gold support is at 2000. Resistance is at 2050 and it's bullish. Okay, so I'm going to leave that bias chart here for you. Steve, Stelios, good morning, gentlemen. How you guys doing?
Good morning, sir, everybody.
Good morning.
Hey, so the dollar is actually coming under pressure. I think it gives, that the weaker number gives people a reason just to sell dollars at this point. What do you guys make of this? What do you guys make of the data here?
Well, I think it's a tough one to. I mean, the data is very volatile, right? These numbers, we went to minus 19 million, then plus 4 million, and it's. I know it sounds crazy to say this, but even these swings are. Given the recent volatility, they're kind of expected. The dollar is weaker because I think same as weeks now, risk higher, dollar weaker. End of story, I think. So the market thinks, oh, maybe if this number is weaker, then more stimulus, hence risk higher, hence dollar lower. I mean, I don't know. It's the new normal. What do you think, Steve?
I think it's definitely that, in combination with the fact that I think several investors have started really getting worried about the fate of the dollar. Given the ominous U.S. fiscal position, and no end in sight in exploding deficits, et cetera, et cetera. So I think it's both of them.
Yeah, and the dollar is, I think, and this goes for me too. There was a lot of us, myself included, that was looking for a dollar bounce early this week, and so what we got is we got a bounce, but it was very short-lived. I mean, the euro, the euro, we basically bounced like half of Monday, Monday, and then Tuesday we ripped back, and here we are on Wednesday. Now, I think the dollar might be a little sideways here, but I think it also has to do with something that we can't really put our finger on yet, is if there's risk aversion, if the stock market feels a little bit of heat, will the dollar bounce? I still think that the dollar will firm up a little bit. I just don't think it will rally aggressively unless
I think exactly the same, Blake. I mean, it will firm up, but will it return back to close to where it was? I think no way.
Yeah.
95.50 is really going to be an important level if we get any strength. Kind of a bull bear line for me.
I'm sorry, what level?
95.50, Blake, where it broke down.
Yeah. I think that as this right here is really, it is really key. But and then that's funny you mentioned that number, Dales, because that's the number I on the week ahead video, I said, hey, the dollar might get a rally, and this is back when we were here. So we might get a rally back to 94.50, but it's really the 95.50. And I drew it kind of like this. I said, this is going to be really critical as we come back up to this big breakdown point. But now the question is, looking at the dollar, it's like, are we even going to be able to make it there? It's the
maybe new lows first before that happens.
Yeah, maybe. So,
well, I know.
Steve, hey, it's not like you haven't been around the block a few hundred times.
I'm a blind squirrel in the middle of the forest.
Aren't we all? Steve, Stelios, I'm going to pass it over to you guys. Remember, ladies and gentlemen, if you guys are want to support Forex Analytics, make sure you visit our webinar sponsors, Forest Park FX. Also, Pepperstone is one of our other sponsors for this webinar. If you want to, possibly get Forex Analytics for free for a period of time, take a look at why we partnered up with Pepperstone Securities. So, Dale, Steve, Stelios, I'm going to pass it over to you guys.
Thank you.
Thank you, Blake.
Thanks, guys.
Have a good one, Blake, and have a great time.
Oh, thanks. I'll
put some sunscreen on, man.
I'll be a lobster today. All right, see you guys.
Thanks, Blake. By the way, we're talking about the DXY. If you show my chart on the DXY on the Forex Analytics platform, I had drawn this. Yeah, the monthly one. I had drawn this months and months ago, and I think long term I am a dollar bear for sure. I just think we might get a spike if the risk feels some heat, like Blake said. And if I recall correctly, yes, I have an arrow drawn there, which shows roughly the lows of 2018, which is like 89, which I think is quite feasible. But as I said, I think I think we might get right? Yes, I think we might get a little spike if we see risk kind of in doubt a little bit. Anyway, so. What do we have to say? Okay, let's start with the data quickly. We had New Zealand employment numbers, which were much stronger than expected. Unemployment rate dropped and quite a bit, and much lower than expected. This again is kind of in line with what we're seeing across the world because of the gradual reopening of economies over the past two months. The question is what happens now and how do we confront this apparent new wave of COVID. We had PMIs out of Europe and UK, all marginally lower, but really tiny bit, nothing to write home about. And obviously the big one was ADP a little while ago. We did have also trade balance from the US and Canada, both worse than expected. The US minus 50 billion in June, which is actually, I think, a pretty good number because the last month was, let me just check again. No, that's roughly the level 50, 60 billion over the past few months. You know, what's billion here, a billion there.
Well, yeah, what 60 billions between friends, right?
Yeah. What else we have? We had Donald Trump tweeting. Interestingly, he did say yesterday and today he's expecting big job numbers on Friday. Question is, when does he actually get to know the numbers? I don't know what the protocol is, but that's what he tweeted. And also, he did say that he did tweet that he expects a vaccine a lot earlier than the end of the year. So the Twitterer in chief said that, and let's see how that pans out. We also, speaking of the US, we also had the Democrats and the Republicans kind of coming closer towards an agreement in terms of what they're going to provide for the next package. It's going to be at least $1 trillion. The other side wanted $4.5 trillion. It's going to be somewhere in the middle.
I'm with them.
Yep. And
just put zeros on it.
Yeah. And so they're making progress there. I don't think anybody has any doubt that there will be an agreement of some sort. And also there is supposed to be talks between the US and the Chinese on phase one and assessing how that's going. Badly,
yeah,
the first word that comes to mind, but at least they're talking, or they're going to talk, which is a good start.
I retweeted, speaking of that, Stelio, I retweeted what was it, yesterday, the day before yesterday. For example, from the targeted 25.3 billion in energy products, that was part of the deal, China has bought so far in the year 5%.
Yeah, they have a lot of catching up to do.
Yeah, and on all aspects of the deal. I mean, the deal is a joke in the sense that there is 0% chance that they're even going to get anywhere close in fulfilling it. So, there's no deal. I mean, there might be on paper, but that's the only place you can find it.
Yeah. Yeah, that's true. I mean, you know how markets work. It's all about sentiment. So if things look like they're improving, I'm sure that's going to help markets. Always look at the bright side, don't they? So they're gonna like that. But like you said, at the moment,
we signed the deal. It's not being honored. But sure, if we agree that we're going to do better on the deal, that's going to change everything, right?
Yeah.
Well, since COVID, guys, things have really devolved between
that
China
is
and
true.
the US.
Although to be fair, Dale, from the initial data we had, from the first 1.5 months pre-COVID, it was more than obvious that the deal would, in any case, not be fulfilled. You know what I mean?
Yeah,
but of course, after
exacerbated,
COVID,
calling it the China virus. And I also think, Steve, that part of dollar weakness is confidence, a lack of it, the way the U.S. has handled the pandemic. Some confidence. We used to lead. This is different. Okay, the whole world would look to the U.S. to solve big problems like fascism and rebuilding countries and everything for decades. And now they look at us and they go, what's wrong with the US? They can't even handle getting good testing in. So, the confidence in the US, along with the fiscal and structural issues financially, has deteriorated greatly, especially during this COVID crisis, because we look incompetent.
Well,
that's my view, and that's from being in the middle of it.
Yeah. Anyway,
understand how you feel.
yeah.
It doesn't inspire me to buy the dollar.
Yeah. No,
Okay. Anyway,
that's a fair point. That's a fair
To
point.
be honest, it doesn't really matter about that because you're long the dollar, like it or not. You know what I mean.
oh yeah,
as a local.
yeah. All the cash I have stashed, where do I go?
I mean,
and convert it?
future
income, everything, like it or
Yeah.
not, it's dollars. That's
Yeah.
it.
Oh,
As
boy.
us here in Europe,
Yeah.
we're long the euro, like it or not, right?
Reichmarks.
Yes.
Two other things to mention. Commodity currencies, they're still doing well. I am still short Euro Norway. I am just holding on to that. And metals, we're seeing what metals are doing. I'm holding on to my last bit of silver long. I'm really, really trying not to sell it. It was up like 5% yesterday, 3% today. It's very tough to stick with it. But
It has really gone vertical. So
yeah,
to be fair, I would start getting, really cautious up here. I mean, we had like a little triangle. We broke out of it. We've gone vertical. Divergences, of course, at RSI being, above 85. I mean, yeah, I do believe that, sooner rather than later, we're going to see a pullback. Of course, as we've said, like probably 100 times during the past 3 months, and if not 100 times, more than 50 for sure. I would not be shorting any of the metals for any reason. So, in my opinion, you're either long or you wait for a decent pullback to buy. There is anything else is, in my opinion, I'm probably going to have to use the word moronic in the sense that, as I've said, there is still a chance that you're going to wake up one day and you're going to find gold $100 higher, and it can happen. Trust me, it can happen.
Yeah.
Even after this rally, it can still happen.
Yeah. Yes, and I'm of the same opinion. And as for stocks, I still have, I've had this for a while. I still have a bearish bias. I'm not long and I'm not short. I'm looking to get long at lower levels, but I might not get them. So if I miss that, hey, I missed it. I'm more than happy to admit that. I don't have a position, but I think we're going to have one leg lower. How much lower, I don't know, but I am waiting to get long. I think everybody is. That's a problem. Anyway.
Yeah. True that.
So, yeah, so that's it from me, my friend.
Now, having to do with other developments, Telio, we've had crude oil, getting a nice bid. I'm still tracking this pattern. I still think there is a chance that we're going to see either a failure from this pattern or alternatively, which it looks very likely to me, like one last thrust out of this pattern and then a reversal for a deeper correction, which, whenever that happens, is also going to coincide with some pullback in stocks. One of the most interesting developments, though, and I was, actively monitoring it, I had said since weeks ago, I actually got triggered long, was the breakout in natural gas. If you remember, we had been discussing this interesting rectangle pattern in natural gas with it being trapped between like 152 and 205 for a long period of time. I mean, we were there since 20th of January. So, we got a nice breakout from it. And, this patterns extension dictates that we can easily now see an extension towards 250 to 260. So I do think that from a technical perspective, it's a very nice looking pattern, clean. Can it be a failed breakout or whatever? Yes, there is always a chance. But if you're always cautious because any pattern can fail, yeah, any pattern can fail. But then you would be taking no trades whatsoever, right? So I think from a technical perspective, that's a clean breakout so far. And I think there is a very nice chance that natural gas is going to try to do some catching up with crude oil, which, has obviously moved a long way further, right? I mean, just, several days ago, natural gas was testing the lower end of its pattern and, lows, multi-year lows, while crude oil had, some time ago really rebounded strongly. So if natural gas tries to even do a little bit of a catch up, it can easily squeeze to 2.5 to 2.6 dollars, as I said. Now, having said that, and in order for me to be able to address some of your questions, I'm not going to go through the main FX pairs again. Just a very brief observation. As you see, corrective patterns, short-lived corrective patterns seem to be getting resolved today to the upside in the direction of the prior move, both in euro, in pound, so on and so forth. Even if you look at commodity currencies, USD CAD broke lower, USD NOK resumes lower. I'm more than 17% in the money in this one. Would be, being short USD NOK and Euro NOK would be amazing trades. But on the other hand, I have the stock indices eating up these profits. I'm still short there, and I'm still expecting for a pullback. I do believe that I can get rid of them at some profit. I'm not really a believer in this move, but anyhow, we'll see how that is going to end up. I still like this channel. I still believe this high there in USD NOK was a probably generational high. USD SEK remains under pressure. The two of them look very, very similar. I would still prefer USD NOK. Obviously, at some point, we're going to see a rebound because once a risk turns off, even for a few days, what's going to happen is that at the same time, the dollar is going to go bid, which of course is going to help USD NOK rebound. But at the same time, we should see crude oil reverse lower, which is going to help the Norwegian kroner pull back. So the combination of the two should produce some nice rebound in USD NOK. I don't really intend to get rid of this position because I look at it as a longer term position. I'm probably going to be adding at any decent rebound, but for the time being, remains within this pattern, and there is nothing bullish to talk about as we speak. There is only some RSI divergences, but these can, as proven lately, once again from precious metals, these can persist for a long period of time. Now, in other instruments that you might have not had a look during the past couple of days, copper is showing some nice consolidation pattern here within this ascending channel. So I have to say that this does not look to me like it's about to break down. Quite the opposite. I think that there is a chance that this is going to break out to the upside for at least one more push higher. There was a question yesterday I didn't have time to address. It had to do with platinum. I had mentioned the importance of the confluence of resistances at 875 having to do with platinum. So once we broke out from 875, that was by definition a bullish development, enhanced by the fact that a few days ago we had this sharp move lower, which backtested this area around 875 as support this time, and the market went bid again, and we're resuming to the upside as we speak. So I do think that this might be a big bottoming pattern in platinum, and platinum might have a lot of catching up to do with some of the other precious metals. I think that at some point there is a very good chance that the metal mania, and I'm not using the word in the sense that it's a bubble, right? So I'm not using it in that sense. Might spill over to platinum as well because it remains, long term, historically at very cheap levels. So keep that in mind. Now, let me see if there were more things I wanted to very briefly address. Blake already showed this pattern in the S&P. I have the exact same pattern. NASDAQ, I'm tracking this ascending channel. There is another wedge here. Next upside area is 11,550, the 161.8 of the last correction. This market is showing a lot of divergences, but we've mentioned that before. I mean, divergences can persist for a rather long period of time before they eventually get addressed by the market. So a divergence on its own is definitely a weak signal for somebody to try to fade a trend. So keep that in mind. Now, last but not least, having to do with bonds. Now the 10-year has been closing at all-time highs day in, day out. We had that spike higher, but it was just, an intraday spike. That tells you all you need to know. It means that, in essence, bonds don't really agree with the optimism of stock investors, and we know who usually is in the right side of the market. Yields, of course, quite the opposite, right? And having to do with the bonds, just something I wanted to address. Keep in mind that the bonds, it's not only that they're showing this divergence that you see here on the other side, it's the fact that we had confluence of 3 different resistances. You can see this ascending channel, this longer term descending channel, the 88.6% fib. So far, it seems to be capping price action. Clearly a breakout from this long-term channel is going to be a very bullish development. But, until that happens, we might see a rejection and the pullback, at least in the shorter term. So, bonds quite at an interesting juncture. Now, let me go through some of your questions. Natural gas, I already addressed natural gas actually quite early on. I said that I got triggered long in a breakout from this, what is it now, like a 7-month range. So I think quite a nice breakout. Let's see how it works out. So let me go back to the questions. IWM looks good. I'm assuming you are referring to this IWM, the Russell, right? And I will have to agree with you in the sense that, first of all, the IWM for the time being held on once again to a retest of this ascending channel trendline support. So, 1 point for the bulls there. And the second one is that within that channel, we can see this recent consolidation as a symmetrical triangle, and we are breaking out from it as we speak. I mean, we closed above it yesterday, and pre-market activity shows that we're probably going to be opening up higher and resuming to the upside from here, which means that yes, the move higher in the Russell for the time being remains technically uninterrupted. My conservative portfolio is up roughly 60% over the past 28 months, and they have been able to advance thanks to your educational program. Thank you, Ingmar. Let me see. Going through more of your questions. Yep, we already spoke about the data. Yeah, good for reminding me. Cryptocurrencies. So both Bitcoin and Ethereum actually was leading in this case. So let me start from Ethereum. So Ethereum actually was leading Bitcoin in this case. It broke out from this, very clearly observed descending channel. Not only that, prior to that, we had built a symmetrical triangle and a rectangle. So once we broke out from that one, from that confluence of resistances, with resistance being roughly at $250, look what happened. Ethereum literally exploded higher, and within a few days, it almost doubled in price. Reached a peak of 414, right? So, Ethereum clearly was leading higher, but, following Ethereum in some days of a delay, Bitcoin broke through this multi-year descending trend line resistance, and undoubtedly this is a very bullish development. So as long as we are trading above, like, you want to call it 9.6k, 9.7k, the path of least resistance is higher for cryptocurrencies as well. In general, if you notice, everything is well bid against the dollar. So the dollar is in essence being sold against more or less anything you can find. and for a good reason. I mean, I've been saying for years I'm extremely bearish the dollar, because the fate of the dollar was more or less a given in the long term. Of course, it's one thing saying what's going to happen long term, another thing timing it. Because we were clearly noticing what was happening with the U.S. economy. The U.S. economy was underlying extremely sick, and it was only a matter of getting a trigger for deficits to really get completely out of control, and money printing to get completely out of control. In this case, I'm afraid that what was contained in the previous crisis as asset price inflation is not going to stay in assets, and I think that's going to have devastating effects for the dollar. And we're going to see this unfold in the months and years ahead. I think we're just seeing a very first glimpse of what is to follow. Of course, nothing moves in a straight line, so keep that in mind. Okay, who do we have today?
Don Mead.
Okay.
At 7 Sentinels.
Okay.
So we'll see what you know what a Sentinel is, Steve, right?
Yes.
What is it?
It's a guardian.
All right. So we'll see if the guardians of the bull market are looking a little tired on this reflex rally. So great time to have Don, because that's what he looks for. Steve, it's great to have you back. You sound better. I heard you had an adjustment.
Yeah,
and,
physiotherapy always does wonders.
Miracle worker. So you sound good. And
I am. I feel nice now.
All right, good. And it's great to have you back.
Thank you.
Really,
nice to be
and
back.
really back now. You were here, but now you're back. All right, Don, I'm going to get you set up now. My trading warrior brother, get you set up as a panelist here. And we haven't talked in a while, so I'm really looking forward to seeing what you have. Welcome back to Face, Don Mead. How are you? Waiting for you to unmute.
How's that?
You loud and clear.
Okay.
All right,
now,
Don.
Just get the picture to line up properly.
All right, we will. All right, so it's that green box. It says share. It'll be on the top. It's a drop-down menu. You click it, and it'll show your screens, and then you choose the screen you want to show.
Okay. Are you seeing any screens at the moment?
Not yet. Did you click the green box there?
Well,
that says
I'm
share?
not seeing what screen I'm supposed to be looking at. I mean, what box I'm supposed to be looking at.
Okay,
we'll figure this out.
It's a green icon, and it'll be where it'll show chat, questions, show all of that, and it's a green box.
For some reason, I don't have that screen at all. Do I get it from email or what?
No. If you just roll your cursor over either the top of the screen that you're seeing or the bottom, you'll see a green box come up.
Just find the Zoom panel, and there is a green button saying share screen. It's the only colored button, actually. Once you click it, you're going to get a second screen asking you what do you want to share. You want to share a specific window, you want to share a specific screen in case you have more than one screens.
Okay, I see a screen that says talking Don Mead, and it just said talking Steve.
Right.
And where on that page am I supposed to click?
Put your cursor above where you see people talking.
Okay.
And do you see a menu drop down?
No.
Okay, then do it on the bottom of the screen. Move your cursor around. You'll see Q&A, chat, share screen.
I see chat.
You see share screen?
I see share screen.
Click it.
I think we're almost there, right?
Yeah, and now you're going to get a second window popping up asking you what you want to share. There you go.
There it comes.
Something
Do you
comes
see a chart, a 50-year chart of the New York Stock Exchange Composite?
Yes.
Wonderful.
We got it, Don. Thanks for
Good
helping,
morning,
Steve.
Dale.
Good
Sorry
morning, Don.
for the
That's okay.
confusion, but it's
all right.
always great to be with you.
Yeah, it's nice to have you back, Don. So, it doesn't matter how long it takes you to get good content up there if you get it up. So, all right. So you're quoting Solomon here. He had plenty of gold, didn't he?
Yes, he did indeed. Yes,
Yeah,
he did.
The richest man in the world. So he found
And he
found it to
also
be
knew that
meaningless.
there was a time to gather gold together and there was the time to cast it apart. And the same with, I suppose, paper assets and stocks.
Yeah. So let me ask you, Don, with what you've seen happen in gold and I know you're focused on the stock market, but you've been around for a while, what you've seen happening to the dollar and the gold, how does this play into your Seven Sentinels work? Does it at all?
My thinking is purely technical, and
okay, so we've had this huge recovery. I don't know about you, Don, but after we bottomed in March, yes. I didn't think that we'd see a 33 handle again.
Oh, I didn't either. I certainly didn't either. But what I think this is a continuation of the topping pattern that began clear back in 2017. Again, just to back up just a little bit, I thought it was interesting that King Solomon did indeed say that which is has already been, and that which is to be has already been. And it's really the same thing as Livermore said again and again, which is there is nothing new in Wall Street. Whatever has happened, whatever happens today has happened before and will happen again. So he was just repeating what King Solomon said thousands of years ago, and it is so true. That is the way I approach the market. That's the way I see the market. I see the market as a kind of a wheel within a wheel and a spiral that just continues over and over and over with the same patterns. But
your special note at the bottom of this chart is of special interest to us is that point in the cycle where 20-week McClellan drops below zero. Are we below zero now?
Yes, we are. And I'm going to get to that in just a second. But looking at this 50-year chart of the New York Stock Exchange, note that there were two particular tops in the last 50 years that were complex and prolonged. And those were 2000, you see this?
Yeah.
And then 2017 to 2020. And as 2000 produced a big, long, sustained decline, so will this 2017 to 2020. But skipping ahead to that point, here's the last 20 years of the NASDAQ composite. And look how, if we look closely, the 2000 top ended the same way as the 2007 top, with the NASDAQ making a new high, but RSI being lower. NASDAQ makes a new high in 2007. RSI is lower. And here again, we're with the NASDAQ making a new high, RSI is lower. That does happen in each top. But something else that I found particularly interesting is I tracked
there were a few failed signals on that too, weren't there? Where you had divergences that didn't work out for a big top. I know because personally I've traded them.
Right. Yeah.
Right. So I mean, in the rearview mirror, it's easier to
allow
see.
For that. Pardon me?
In a rearview mirror, it's easy to see which ones were the good ones, but there are many divergent signals that fail.
Yeah.
And the market keeps running. But this one looks pretty glaring all the way on the right-hand side of your upper screen.
See these little boxes here, these little red boxes? Those were in 2000, 2007, and 2020 when the 20-week average of the McClellan oscillator dropped below zero, but in particular, when it did that, as the NASDAQ was actually making all-time highs. So when you get a combination of an all-time high on the NASDAQ and the McClellan oscillator below zero on a 20-week moving average, that's significant. That's very significant. That's where we are. In fact, this chart shows the 13 years. It zoomed in just a little bit so that we can see again 2007. Yeah.
Can you explain to our listeners what the McClellan oscillator is saying based upon what it's comprised of, and how do you get a zero reading?
Absolutely. The McClellan oscillator is, I think, the best measure for a market technician to see what is happening to the advances and declines in the market. The McClellan oscillator literally measures how far above the, trying to remember, how far above the 39-day advanced decline line is the 19-day. So if the 19-day is way above the 39, it means that the momentum in the market is pushing up because you're getting a lot of advances versus declines. When the 19-day drops below the 39-day, it tells you that the advanced declines have slowed way down and are going relatively negative. So that's why I use the McClellan oscillator. A lot of people seem to use the McClellan oscillator as an indication of overbought and oversold. I don't really look at it that way. I look at it as pure momentum. It is the momentum of the market. If the McClellan oscillator is advancing, the momentum in the market is advancing, and that's going to take prices higher. When the McClellan oscillator is declining, that means the momentum of the market is declining, and that's going to pull prices lower. And that's why it's highly significant here that the 20-week moving average of the McClellan oscillator went negative this last week as the NASDAQ itself was making a new high. And we've seen
very narrow breadth. I think it was, at the last new high, I don't know, out of the NASDAQ 100, I think 4 stocks were making new highs.
Yes, it's interesting that, actually the top 5 stocks on the Standard & Poor's 500 make up now 22% of the entire Standard & Poor's 500. Just 5 issues make up 22%. And it's the same thing with the NASDAQ. The advance in this market has gotten very, very narrow and limited to just a handful of stocks. And you know which ones they are.
Yeah.
It's Apple and Facebook and NVIDIA and Tesla and Google.
You've been doing this Amazon for a while. It's never been this concentrated, even if you go back to the Nifty 50 days, or I don't know how concentrated it was in NASDAQ in the .com bubble, but I don't think it was as narrow.
It wasn't. I read a study the other day that showed that in 2000, it was the top 5 stocks on the Standard & Poor's 500 made up 18% of that average. Today, it's 22% of that average, an all-time high. It's never, ever been this concentrated. You're absolutely correct.
Okay, buddy.
And that historically has always led to trouble, ultimately. So that's why I'm very wary in here, taking it very low key and waiting for the downturn. I think by the way, if you look back just over 2018, when this phenomena happened before, where we dropped below with the NASDAQ making new highs. The last two times were the end of January 2018 and February of 2020 were the last two times we had the same setup as we have now. We're back there again. But yes, it is a concentration of the, sorry about that. It's my wife's phone, and I don't know why she doesn't turn that alarm off. But anyway, so that's where we are.
Okay.
In a very, very narrow market, and that narrow market is spelling trouble for the market.
Are you starting to accumulate any bearish ETFs yet?
I have a light position going now, but I'm waiting for the decline to start in earnest to really move up quickly to a.
Okay, is that going to be based on breaking a support level, a price level, or I know that the Sentinels give you biases and tell you what you should be doing, but they're not triggers, are they?
They are triggers in a sense, but frankly, lately they've been switching over to sell and giving sell triggers prematurely. It's been frustrating for me. I mean, I'll be very honest with you there. That normally doesn't happen. And I think the reason that is happening now is because the breadth of this market is so very narrow that we are getting sell signals in my Sentinels while this market is still being pulled up by a handful of stocks, if you see what I mean.
Yeah, so this is pretty unlike everything else in our current life, unprecedented.
Yes.
Or hasn't happened in 100 years.
That's right. 2020 will be a year for the ages. That's there's certainly no doubt about that.
Okay, so a little whipsaw action happening with your guard that watch over you and your family, and
exactly.
So, what do you do in an environment like that? What's your
self-talk?
Okay, you wait. Okay.
And here's why, Dale. It's because you remember January of 2018.
Yeah, I do.
You remember February of 2020. When it started down, there was no looking back. There was no question about it. It was.
Yeah, if you waited for rallies to sell, maybe there was one.
Yeah.
And that was it.
So my approach is just simply to wait for that to show itself again. And it will. It could be any day. It could be any hour. Maybe it'll be a few more days. Maybe it'll be a week or two. Maybe it'll surprise me. But it's coming, and we're very, very close.
Okay.
Here is a daily McClellan oscillator for the Standard & Poor's, or for the New York Stock Exchange. And again, you can see that as the Standard & Poor's made new high yesterday, the McClellan oscillator is basically right now at zero, and the moving averages of the McClellan 13 and 34 day are at zero. There's no upside momentum left. That's the way I think of this. Here is the McClellan oscillator on a daily basis for the NASDAQ. And look at this. As the NASDAQ's making all-time highs, the McClellan oscillator for the NASDAQ has been slipping further and further into negative territory.
Yeah, so so I've noticed it just price action wise the last few weeks that NASDAQ is kind of losing a little bit of its gusto compared to the S&Ps.
Well, it was just 4 days ago. You'll recall that we had, I think,
those earnings.
The top 4 of the 10 most active price momentum leaders that I look at were up between 5.7 and 7% each.
Yeah.
Then the next day they were up like the top 4 were up around 3 to 4%. Yesterday they were up like about 1%. And I'm looking at them right now, and I see that
steady.
most of the list is down. There's only a couple of them that are even. Oh, there's only one of them that's up 1%, and that's Microsoft. So yeah, they're losing their luster quickly.
Yeah. Okay.
Also, you can see this same phenomena, the thinning of this market by this array. Here is the daily NASDAQ composite looking out over, let's see what time period we got. We got about 4 months here. That's actually 7 months. And the NASDAQ is making new highs, and the Standard & Poor's actually made a new post-March new high recently, but has not reached its high of February. But look how the whole rest of the market has lagged badly. The New York Stock Exchange Composite Index is way down from its high of February, and even way down from its high of June, early June. Same is the case for the Russell. Same is the case for the transportations. And here's something that's interesting. If you look at what percentage of stocks are over their 200-day moving average, 45.58% are above their moving averages. Let's put that another way. 54.42% of all New York Stock Exchange issues are under their 200-day moving average. When the stock is trading under its 200-day moving average, to me, that's the definition of a downtrend.
Is that a big number? 54.4?
Yes, 54%, 54.4% of the entire New York Stock Exchange is in downtrend.
And that's what, a 50-day average, Don? Is that what you said?
Pardon me?
They're under their 200 or 50?
Under their 200. Under their 200. Look at the bottom of the screen right here.
All right, got it.
That number by itself is not that amazing, but it's pretty darn amazing when you realize that the Standard & Poor's 500 just made another new high yesterday and is trading at yet another new high this morning. But 54% of all the New York Stock Exchange issues are below their 200-day moving average, in decline. They're already in bear markets.
Okay. Got it.
So at any rate, I was going to show you one more thing, and then I'll we can all get on with our days here. Here is the composite for the last 13 years, making a new high. Standard & Poor's making its new post-March new high. Now take a look at the CBOE put call ratio for equities only.
Okay.
It is clear down here at 0.49% on the 34-day moving average. That is the lowest it's been in that entire 13-year period. Same with the total put call ratio for the CBOE. It's clear down here at 78%. It's essentially matching two other times when it was at its 13-year low.
Right.
Every time we got there before, boom, that was the top. If you track each time the equity only put call ratio got below 52 even, those were very, very important market tops and led to sharp declines. And that's where we are now. When both, by the way, the total and the equity only simultaneously get to new lows, that's only happened a couple of times. And those couple of times were specifically February.
I didn't think anything could make me more bearish than I am before the interview.
Well, the numbers are sure there. But anyway, so this is kind of a low-key presentation. I don't have anything earth-shattering to show other than we are at, I think, a very, very, very close now to a turning point.
Important. You know what's earth-shattering, Don?
What's
that
that?
guys like you and me are still doing this after all this time. Okay, so it's one thing to
Yep.
be a warrior. It's another thing to still be able to stand up and go into battle after many campaigns. And I salute
Well,
you
it's,
for that.
I don't know about you, Dale, but it's the thing that keeps me going. It's
Okay.
really having something this fascinating to do, that I put this much interest in is what makes my life just really.
Yeah, we don't have to do brain teasers to exercise our brain when we're working on
That's
the
for
most
sure.
complicated jigsaw puzzle in the
We
universe.
have all the brain teasers we can use every hour of every day.
Well, I appreciate your work, Don, and you, and want to thank you, my trading warrior brother, for coming here into face and showing people some under the surface things that normally people don't look at. So
Good.
thanks again,
Thank
Don.
you. Well, thank you so much, Dale. I really enjoy being with you, and I thank you again for having me on.
And people that want to follow you, Don, best way?
7sentinels.com. And
Okay.
I've been running a 1 week trial for just $7. We publish all day, every night, every weekend. All our trades, all our indicators, all our everything is in that 7sentinels.com, the individual articles every day and every night. And for $7, you can take a look at it for a week and see what you think.
Yeah, it's almost like charity.
That's right.
All right. Anyway. All right. I love you, buddy.
Almost free, as they say in Mexico.
Oh, yeah. Yeah. So thanks very much, Don. And guys, check it out. You could, it's important to learn about these internal things if you're a stock market trader. And Don's one of the best to learn from. So
Thank you.
That's a wrap for us. Remember, don't just count your pips, count your blessings. Adios, everyone. We'll see everyone tomorrow for investing.com Thursday. Adios.
Thanks again, Dale.
You're welcome, Don. Thank you. See you, everyone.